Diving right back into the numbers this week, Urs, we have the Euro area inflation numbers that came out, as well as we're going to be talking about the Swiss economic sentiment before we get into kind of what we see potentially happening with the interest rates. So diving right into the Euro numbers, we see that inflation ticked up to 2.6% from 2.5%. They were forecasting actually a slight tick down to 2.4. So they're kind of disappointing and surprising news. What are you kind of seeing there? I mean, especially with energy being kind of the uptick, the strong uptick at 1.7% rise. What do you see there that's interesting to you?
Yeah, I think it shows that the situation is not as stable as many would have expected. So the expectations and forecasts to have a continuous downwarding trend on the inflation numbers is uh, is being put in question with these numbers.
Hmm.
I mean, in the long term, there will probably be a further decrease in inflation, but it just also justifies the decision of the European Central Bank, I think it was last week, when they decided to keep interest rates at the current levels and to wait for more data to come in.
I think that is the right decision. I mean, when the European Central Bank is looking at all the various economies involved and different things happening in different countries. I mean, if we look at Germany, France, and Italy, for
Mm.
instance, their inflation all ticked up, but in
Yeah.
Spain it ticked down. Now France or Spain was at a higher level in terms of inflation numbers, so it's coming back closer to kind of the numbers of where France and Germany are. But it still shows that there's different environments that they have to play into. I think on the other side, you have Germany and France and Spain really economically struggling, if not coming out of that struggle, still kind of sitting in it. It's interesting to see Germany contracted slightly in terms of GDP with the numbers coming out this week, but Italy seemingly fairly a strong economy.
Yeah.
So the European Central Bank really has to make sure they have enough wiggle room in terms of all of the economies they're dealing with and how they're playing with each other.
Yeah, the question is also what are the reasons or the circumstances why inflation is coming down going forward. So far, it has been mainly because of the base effect that has played into the decreasing numbers. But what if uh, the economies shift more into a recessionary environment, and so businesses have to start lowering their prices? That could also be something that is quite hurtful for the people and the economies, but at the other hand, also decreases not interest rate but inflation.
Yeah, especially talking about kind of the economy makeup with the European economy being a strong exporter
Yes.
versus an importer, and where the U.S. market sits as being a strong importer. How much effect will that have if the U.S. goes down? Well, could have strong effects on Europe,
Yes.
and so they have to consider that as well and what the challenges are facing. To global partners, and on that, we're going to look at Swiss economic sentiment, which is a much smaller economy that does a similar thing of looking outside of what's going on to see, where's our economic future in this global landscape. And Switzerland, their economic sentiment came down
Yes.
uh, quite a lot from where the expectations were. They're expecting a slight increase, and instead they got a serious reduction. They're still positive on the
Mm.
economy, but a little bit less enthusiastic about its future growth.
Yeah, I mean that makes sense considering what is going on in the world and like all the threats that are out there, not only on the economic level, but on the government levels, on the
Yeah,
war levels where
yeah.
we have in the Middle East. I mean, it could escalate very quickly there. We also are not near the end, it looks like, in Ukraine. And then on top of that, we have all this protectionism going on. We just this week saw the Chinese government coming out with their plan how to react to their economic downtrend, and they also want to be much more autark, so that they like develop the technology which they now get or used to get from other countries, especially the US or Taiwan, through the US again. So I mean, it won't be an easy way into the future,
Mm.
but especially with the Swiss economy, that is one of our strengths, is that we always had to adapt. We always had to make sure that we stay competitive, especially with the strengths of the Swiss franc.
Mm.
So uh, I'm quite positive that we will get back to a more optimistic level of growth and of
Yeah.
consumer
Sentiment.
sentiment.
Yeah, economic sentiment.
Economic sentiment, consumer sentiment is something we will talk next week about.
Yes, yeah, which is kind of interesting with economic sentiment, where that comes from versus where the consumer sentiment comes from in terms of investing professionals versus kind of more of the public feel, small business feel for the outlook.
Yeah.
And I think what's interesting that you bring up with China that it's fascinating is we've seen their foreign direct investments fall quite a bit, 29%. So this move to more of an authoritarian stance of, hey, we've got to look for ourselves because maybe potentially the period of incredible foreign direct investment is going to go away and we need to focus on ourselves. I mean, we see things, changing the landscape that are going to be challenging and that the world's going to have to deal with these major economic powers shifting things, being in recessions, potentially going into a recession, or having cracks in your economy that have effect on each other. And so Switzerland, while still being positive in their outlook, is concerned with things. I mean, we had the news today that there's potential escalation in the Middle East with one of the leaders being killed. So there's a lot of uncertainty out there that can spark things even further.
Yes.
Now, kind of want to shift into today. We're filming this. It's Wednesday. We have a national holiday tomorrow, so we're not going to be filming. The Federal Reserve has their interest rate decision today, but later in the day. So we're recording this much before. I want to kind of paint a picture of what we think is going to happen, and if they do lower interest rates, which we don't probably think is the case. I certainly don't think they will. What would happen at the markets if they do lower it?
Yeah, I mean, the markets, they will react very surprised, but in a positive way. So I could imagine that there will be a kind of a straw fire that markets are increasing by a lot. However, it also would cause some concerns on what's the reason why they're lowering interest rates. So is it that there are more cracks coming up within the economy, especially like one trigger word is like real estate, commercial real estate. So there are a lot of banks that are struggling right now, especially the smaller banks or the medium-sized banks. So it could go both ways. I think the very first reaction would be quite positive. But also given now the inflation numbers that came out in Europe, I think that there will be much more hesitant to actually decrease interest rates rather than just waiting a little bit longer, giving some insights and some hints for their September meeting. And then in the meantime, we will also have next month the Jackson Hole meeting, which also will give some more indications of where the path leads.
That kind of gives a good perspective on the credibility that the central banks are trying to hold right now. The U.S. is coming to levels of inflation closer to what we're seeing in Europe. We're able to get that inflation down much quicker, but are kind of struggling to really get it down to what they want it to be at.
Yes.
And the U.S., there was, when they were putting in all of these spending packages initially in the past couple of years throughout the pandemic, they were saying that they could spend this and inflation wouldn't really go out of control. Well, it did. And now they're trying to get some credibility back. And with the positive numbers coming out of the U.S. and the GDP growth, inflation going down, it doesn't really give the Fed a strong reason to say, okay, let's move it down now, even potentially move it down in September, where that's the first expectations. But coming into the year, we had expectations of 4 interest rates drops, and we...
Even 5 to 6.
Which is crazy to think about today. We're thinking, projecting that even September might be the first, potentially. So, it does present an interesting case. So next week, we're going to be talking a little bit more on China. We mentioned them with the foreign direct investments, talking of their balance of trade. So we'll see the import-export stuff, activity that's been going on, as well as their inflation rates. Then we'll be talking about the consumer sentiment, as you mentioned earlier, of Switzerland. And then we will probably touch on the interest rate decision that did happen, if there's anything surprising that comes up. And then Australia also has their interest rate decision that we might go into.
Wonderful.